Welcome back to the Crypto Factor. Welcome back to your favorite cryptopreneurship show. And welcome back to Gareth Soloway for the Bitcoin Deep Dive. Gareth, thank you so much for being here, man.
Oh, you're welcome, buddy. So glad to be here and great to see you.
Yeah, great to see you too, man. Great to see you too. And today we will be talking, we're going to do something a little bit different here. We're going to take a more mid to long term analysis for everyone out there so they can see the biggest picture, see when the bull market will end, will begin, the bear market will end, and so on. We're going to be talking about Bitcoin, cryptocurrencies, stocks, gold, you name it. We're going to be talking about a whole bunch of things. Gareth, let's dive straight into this. What is going on mid and long term? What should we be looking for?
Yeah,
Other than people subscribing to your channel here and here, they got to do that because Gareth is one of the best, if not the best trader in the world, in my book anyway.
Thank you. Thank you. So I think the key is to recognize that right now, the near term, which we're not going to focus on, very volatile, bear market, we're going to get bounces. But the question is, how low does this bear market go for equities as well as Bitcoin? And then can gold actually turn it around and really start to rip higher? And I think the answer is that the equity markets and Bitcoin still have downside. So what I'm going to do, we're going to look at like longer term charts. We're not going to look at daily charts. We're going to go to bigger time frames. When you go to bigger time frames, you tend to see bigger things. So let's start on the S&P here by going to the SPY, and we're going to go to the monthly chart. And the first thing that jumps out to me on this monthly chart is the bull run that basically was nonstop from 2009. Now, remember this, right? What started in 2009? And the answer is quantitative easing. And so you really have to look at even the dot-com bubble. I mean, it was sharp to the upside, but it wasn't that crazy compared to this run here. And so what that does is that makes me very nervous that we've pulled forward so much of our gains over the mid and long term that the markets are going to have significant further downside. In fact, if we're talking worst case scenarios on these spiders, the S&P 500, I think this is a worst case scenario, you could find yourself back to retest the double top high from 2000 and 2007. Now, that's a worst case scenario. If we're talking some other ideas here, this would be kind of my best case scenario, which is the connector from 2009 here, and here. And if we look at that, that's right around 300 on the SPY, which is right around the S&P 500 hitting 3,000. So you have a best case scenario long-term and a worst case scenario. Both cases are negative. S&P still has more downside to go mid to long term.
Right. If you just wonder what just happened, then my pit bull just barged in the door here. So
that makes it fun, man. I like that stuff.
All right. What I want to see here in 2020, we had that big drop from just over 325 all the way down to under 225. Can we just calculate what percentage move that is?
Yeah, so I think it was about a 30, if I remember correctly, it was about a 30 to 35% drop, or about a 30% drop on the S&P from there to there. And then again, what's amazing about this is we recovered entirely within a couple months. Yeah. And so one of the things to keep in mind is that if you look historically at bear markets without Fed intervention, they last for a couple years. Like here, you had the S&P from 2000 all the way to 2002. That was the collapse. And then if you look at 2008, all the way to 2009, you talked about 18 months. So you really haven't had a bear market since 2009, even though you had a quick, sharp decline during COVID.
But that percentage drop, does it correspond to the other drops by any chance?
No. For instance, in 2007, right, the highs to the lows of 2009, you're talking, I think it was about a 65% drop. Right. So much, much greater, about 2 times what we saw in terms of COVID.
Right. So, but now the current drop, if it falls down to the level, to that average line, the upward average line that you pulled, would that correspond to previous declines by any chance?
Yeah. So you're talking about, we got to basically 480 here, down to, let's say, 300. that would be about, it looks like that would be about a 35% S&P drop, I believe, maybe about a 40%. So it's getting closer, but it's not quite there yet in terms of the size and
Got you.
magnitude. Now, in all fairness, the 2008, 2009 drop was bigger than what we saw in 2000 to 2004. This was a little bit of a less drop. But I think the bottom line is what we have to remember is that the drop that we're going to see is probably going to be in the realm of this move combined, somewhere with the average of these two moves. So my guess is we got about 50% downside before the market can really solidify itself, which does put us here or maybe even lower.
Now, what was gold doing all these previous times?
Oh, that's a good question. Let's take a look at the gold chart, right? So remember, during bear markets, the idea generally is that gold does well. And what you could see is that in 2000, gold bottomed out and actually did have a nice move up and even continued to run higher all the way until 2011. So, I mean, talk about a bull market. That was an incredibly strong bull market. We've then obviously had a little bit of a consolidation kind of. Really, what's interesting is this almost looks like a cup and handle pattern forming on gold as well.
It does. So, so if we go, if we keep on declining, sooner or later, gold has to, well, it doesn't have to, but the probabilities are that that's going to be where people are going to be putting their money for safe haven, and therefore it would be going up. Do you still agree on this view, by the way?
I do, and I think you've seen gold under pressure because rates have been going up, and that's caused, again, the Fed hawkishness has caused the U.S. dollar to strengthen, which then puts pressure on gold. But the key is going to be the pivot, right? So when the Fed pivots and they are no longer raising rates, and in fact, we get in such a dire economic scenario like a 2008, 2009, where the Fed then has to actually start lowering rates, that's where the bull breakout on gold occurs. So you still could be talking about some choppy, maybe retests of the 2000-ish area for the next 6 to 12 months. But whenever the Fed starts to majorly pivot and drop rates, that's where I think the breakout on gold really starts to kick in.
Wouldn't the high risk stocks also go up at that point, though?
Well, so that's the commonality, right? Is that if the Fed is really printing money, then you would think that they would. But my guess is the Fed isn't going to go back to printing money. Instead, what they're going to do is they're going to do it very, very slowly because inflation is still elevated. Maybe not 8%, but if you're talking like a 4% number or 3% number, the Fed's not going to want to print a ton of money, right? They're not going to go right to quantitative easing because then you're going to see inflation go to 20%. So what the Fed will end up doing is they'll lower rates, but they're not going to go right back to that printing. And I think that's the kicker, is that the economic dire straits will keep pressure on stocks because the Fed's not acting aggressively enough. But gold will start to see that safe haven asset where you don't want to be in stocks because they're not going up. But at the same time, the dollar's not going up anymore. Things are not really performing like they should. So gold is the ultimate recipient.
So what would this do to the crypto markets? Obviously, it will.
Yeah, so I think that is also going to be likely where crypto makes a bottom, right? So if we go to the Bitcoin chart here, and again, this is now looking at a really long view of crypto, but I do think there's still downside to go in crypto, and you can see the bear flag on the monthly chart. So midterm, I still think you have downside to 12, 13,000, maybe sub. But I do think when the Fed really gets in that tight spot and you see rates begin to come down and the Fed pivoting and potentially things getting bad enough in the economy, both globally and domestically, that's where Bitcoin could actually put in a bottom and start performing along with gold.
Yeah, and that's what I think as well, that it can decouple from stocks, it can decouple from the markets. That way it can give it can do what it was made to do, basically, along with gold.
Yeah.
So Bitcoin and not cryptocurrencies can actually be your hedge along with gold to stock markets and cryptocurrencies.
That's what I think. And I really do believe that we're now in a protracted, like a long-term sideways chop period. And I think, I don't know if we talked about this last time, but it's a great, in terms of looking at the macro, it makes a lot of sense. But look at like the Brazilian stock market, right? So if you look at, what does this look like, Paul? See this run up from 2002 to 2008? Look
Mhm.
at that run in the Brazilian stock market and then compare it to what we just looked at on the monthly S&P chart. Look at this
Yeah,
bull run here, right? It's very identical. And then what scares me about the US equity markets, and listen, I'm a trader, so it doesn't really matter, but you have to look at what has it done since the 2008 high, and look at this. So you have not made a new high, not even close on the Brazilian stock market since 2008. And now here we are 14 years later. And you could also say the same thing for the Hang Seng market, where, it's another good comparison to what period we could be coming into. This is the monthly Hang Seng chart. So you could see back in 08, 07, you were up here, and all you've done is go sideways with some big dips in there. And I do worry that that's the future. We're looking at a future chart of the S&P 500 here.
got you. Now, I actually bought more gold coins the other day. I know you love them as well. I actually ordered some silver, and I just
Nice.
ordered some silver because I didn't have any. I had very little. What do you think about it?
Yeah, I think silver and gold are good to start to accumulate here. I'm a big bull on silver as well as gold. Maybe not quite as big a bull on silver
Yeah,
versus gold. I think I like gold a little bit better, mainly because gold does have that industrial side. So if we go into a global recession or even depression, the question is how much demand for silver is there in addition to the store of safety. But having said that, if inflation is here to stay at 4% for the next 5 years, let's say, or longer, if the markets aren't going to perform, people are going to finally say, all right, where can I park my money that is going to be safe and maybe at least get me some return? And I think silver looks good for that. So, I mean, I'm a bull on silver. I'm going to erase some of these lines so we can draw on some new lines here. These are just more on the intraday. But since we're looking at the longer time frame, I would say keep an eye on this chart right
mm,
here on silver and look at this. Look at
mm,
these trend lines right here, right? So basically, we have a long consolidation pattern. And what we want to see is silver break above this line and break out. And then you could be headed back to $50. Now, listen, we haven't broken out yet. But ultimately, if we do, you got major upside.
got you. What about oil? What's oil doing? I'm going to talk about a few individual cryptocurrencies in a second as well for the people waiting out there.
Yeah, so oil, my mid to long term, and midterm we'll call 6 months to a year out. I think by mid 2020 to late 2023, we're looking at sub $50 oil. And this goes to counter trend to what a lot of people have talked about. Everyone was saying, oh, it was going to
Yeah,
go to 150, then 200. But what people aren't getting, and this is what drove me nuts back when we were at 130 after the Russia invasion, is that the loss of demand, the shrinking global economy, the amount of barrels that won't be consumed by recessions is way, way bigger than the amount that Russia's not selling, even though they're
yeah,
still selling it to China. But even just the OPEC cuts, I mean, we are talking about a massive reduction in demand globally for oil, and therefore oil is going to continue to go lower. I mean, sure, you'll get your bounces, but I see oil going quite a bit lower by 2023.
yeah. Um, definitely, definitely. Okay, so let's talk about a couple of cryptocurrencies. I know people are watching out there, and I want your input on this. One is ADA, the other one is Quant.
Oh yeah,
We
quant.
talked about some other cryptocurrencies last time. I'm not going to mention them again. If people want to, and XRP, okay, I'll give you XRP just because of the court case and everything. Let's see if the charts can actually tell us the news.
Yeah. So let's take a look. Let's take a look at Cardano here. So this is the weekly Cardano chart. So this isn't going to tell us what that's going to do in the next couple days.
No,
The weekly Cardano chart continues to be a concern, and I'll show you why here.
broke
And
support.
again, I like Cardano, but yeah, the
Yeah,
chart is the chart, right? The chart
yeah,
is my master essentially, and it bothers me a little bit. You can see this support here, pivot, pivot, and right through here. And look, we're starting to peak below that trend line. And so that's a concern. If it doesn't get above soon, Cardano could have another leg lower. You
we'll
could be
close
looking at
below.
30 cents on Cardano in the not too distant future.
Easy because it's confirming it.
Yeah.
Basically, it's confirming the breakdown.
Yeah.
So either it goes up in the next couple of days,
Yeah,
week,
it
week.
could basically we're now on the weekly chart, so it has the rest of the week. So you
Yeah,
basically got Wednesday, Thursday, Friday. I guess Saturday and Sunday technically for
yeah,
cryptos. But if you can't get back above here by, basically you want to get back to about 39 cents by Sunday night, then that's an issue. Then I think you see the bigger
yeah,
sell off
yeah.
ensue.
What about XRP, for the XRP army out there?
XRP, yeah. Let's take a look at XRP here, right? So on XRP, and I got some trend lines here and stuff from previous analysis, but basically what we have is a breakout. So you can see the trend line here and the trend line down here created a wedge pattern. Very clearly, we broke out. We've now then been putting in bullish consolidation again. As long as you stay within these two lines here, this is a bullish chart that should break up. If we start to get below here, then be careful. It could fail and could come down. So I would say, again, a little bit on the trickier side, but at least as of now, midterm would be bullish on XRP.
What do you think about the court case with the SEC? Do you have any views on that, or you just look at charts in this case?
Yeah, it's such a tricky thing. I mean, I'm a big fan of getting some rules down on paper, but in terms of this specific case, I don't have much of a guidance. I don't have a lot of research that I've done on what's going on, the inner workings of it. But I think the bottom line is, as an investor, I stay away from Ripple just because I don't know the outcome. Anytime I can't quantify, or if I don't feel like I have an edge in a trade, then I stay away from it. All right. So again, I think that's the key right now, is just, do you have insight into the analysis, or if not, stay away from it.
Agreed. Okay, and let's look at Quant, because Quant's been doing some phenomenal stuff.
Yes, amazing. In fact, I want to show you guys some cool technicals on Quant, right? So basically, when you look at the Quant chart here, you had this beautiful inverse head and shoulders, right? Shoulder, head, and shoulder. And I'm going to show you a tactic that you can use to calculate the target of a breakout. How high will a inverse head and shoulder go? And I'm going to show you this. This is pretty remarkable stuff. So let's first start by drawing the head and the inverse head and shoulder. So shoulder, head, and shoulder right here, right? So there's our inverse head and shoulders, clear as day. Let's put the neckline in. Now, the way you calculate a target is very simple. What you do is you take the lowest point of the head and a vertical line to the neckline. This is called the neckline here. You take that distance, and when you break out, that distance should be how high you go on Quant. Well, let's do a test of that. The low here was around $40. The line, when you draw a vertical, was around $140. So now you have a $100 move to this line, which means when you broke out here, you should go $100 higher. Well, the breakout occurred at 125, which means at 225 was your target. Look at that. Look at that. Right to the target, and look at the pullback. So it's just some cool stuff, how we figure this stuff out in technicals. And you can see, again, for me, I'm not looking to buy this now, because number one, I wish I saw this before. I would have shorted it there. But on a pullback, where would I be a buyer? I would look for a retrace to that line and then buy that line. If you could get a retrace to that line, high probability, long opportunity on Quant.
Can this also be confirmed with Fibonacci or anything else?
Yeah, I'm sure there are many ways to calculate things out. I didn't do Fibonacci on this, but it would be interesting to see your Fibonacci extensions.
It looks like it can be, just off my head.
Yeah, I mean, I'm not going to pull it up right now, but I agree. I agree. I bet it has something to do with that. And this is the thing, is like, people say to me like, oh, well, how does that work? I mean, why does that work? And the bottom line is, subconsciously, we as humans, which are the buyers and sellers in a market, we abide by these nature rules. Fibonacci occurs in nature. These type of measured moves, calculations, it's mathematics. Everything with our bodies is mathematical, from our cells to everything else. And therefore, it makes sense that just subconsciously, things like this mathematical formulas play out in the markets.
Got you. All right. And one more thing, Gareth, is, what do you think of our bet? We're almost to the end of the year. You gave me a 70% chance I will lose. I'll link the bet at the end of the video in the cards at the end. Where do I stand, man? What are my chances? Some technical analysis on my chances, man.
Yeah, so I think you said it was going to stay above. What number did you say it was going to stay above?
I said 17,000. If it breaks 15.6, you said 12,000 to about 10,000, and that was all.
Yeah, so we haven't
by the end of the year.
Yeah, we haven't seen the break of 17.5, although we still have 2.5 months left. So there's still a lot of time. If we think about just here alone on Bitcoin, it went from 31,000 to 18 in about, what was that, 2, 4, 6, 8, basically 10 to 12 trading days. So, I mean, we still have a lot of time left. And basically the way I view it is that if we break 17.5, we'll head down to 12 to 13,000 pretty darn quickly.
Okay. Okay. So it's still 70%, or is it 68.9%?
Oh, I don't know, man. That's tricky. I mean, I wish I could calculate those odds as accurately as it needs to be.
All right, if you want to see my bet with Gareth, it's a friendly bet, by the way. Check out the video on Gareth's side. If you want to see my trading strategy, my blueprint, watch the video on the right side of the screen. Next, you can click them right now. Gareth, thank you so much for being here. Really appreciate you. I'll put it down in the description below, and make sure you subscribe to Gareth Soloway.
Thank you.
Thank you, man. Thank you.